Ideally, I'd be sitting here right now opening an ice cold can of Coca-Cola, but honestly, I don't actually like Coca-Cola. But what I do like is being a Coca-Cola shareholder. Investing in Coca-Cola is obviously not as exciting as investing in some of the growth stocks like Meta, Google, Apple, Microsoft, Tesla, Rivian, Shopify, what have you. But I believe as a core holding and strong dividend growth stock, it definitely has a place in pretty much anyone's portfolio. And in this video, I'm going to show you why exactly I love Coca-Cola dividend stocks and why I'm planning to buy more of that stock in the future. Well, first off, Coca-Cola is one of the very few companies. In fact, there's only 43 companies in the world that are qualified as dividend kings. That means for the last 50 years, they have been increasing their dividends year after year. And that's really a big thing. There are also other stocks that are called dividend aristocrats. So that means for 25 years, they've been increasing their dividends. So that's already quite a while. And they need to be in the S&P 500, meaning the biggest 500 companies in the US. But in order to be a dividend king, you actually don't need to be in the S&P 500. But for a period of 50 years, you need to be increasing your dividends year after year. And that's really not easy to do because imagine how many crises they went through and still managed to increase their dividends to their shareholders every year. So that's a big thing. And we'll look at the list over here. As you can see, 43 stocks in total as of January 23. There's a couple of them over here. The longest one being American States Water. Never heard of them, but they have a streak of 68 years. But then just right over here, you have Coca-Cola in consumer goods, and they increased for the last 60 years every single year. I mean, history is obviously never a predictor for the future. However, seeing that for the last 60 years, they managed to do that, I'm more confident and sleep better knowing that most likely they are better suited and able to do that going forward than many other companies or startup or high growth companies that only grow their stock price, but at the same time don't manage to pay out any of their shareholders. So for me, that's really reassuring to know. Doesn't mean that I'm going to put all my portfolio in Coca-Cola, but I believe having a good portion of it in there and getting that dividend income is really a nice base of my portfolio. When we look at the largest companies in the world by market cap, you can also see just over here in 32nd place, Coca-Cola is right over there with the market capitalization of almost $260 billion. So really a huge company globally. So that's really also reassuring to know that they're not going to disappear overnight. Now I can tell you all about how great the company in stock is, but I'm just a random guy on the internet sharing my thoughts and information. So a much better way would be looking at what the richest people in the world are doing with their money, and especially about Coca-Cola. So with this, let's see what Warren Buffett, one of the richest men in the world and arguably one of the best investors in the world, is doing about Coca-Cola. You can see over here Berkshire Hathaway's holdings, which is obviously run by Warren Buffett. His biggest holding obviously is Apple, then Bank of America, then Chevron, and then in number 4, which is 8.5% of his total holdings, that's already Coca-Cola. And that equates to $25 billion of his holdings. So that's a huge part. And knowing that he's one of the best investors in the world and he invests a significant part of his portfolio into Coca-Cola should give us as everyday investors a bit more confidence that definitely you really can't go too wrong investing in that stock. Now, just to show you the power of dividend growth investing, here is actually how much Warren Buffett and Berkshire Hathaway have earned in terms of dividend income from their Coca-Cola investment. Obviously, Warren Buffett is a Coca-Cola lover. He drinks about 8-9 Coca-Colas, as I understand, every single day. And that might have been one of the reasons why in 1988 he invested a 9% stake in Coca-Cola. We'll come to the yield percentage in a second, but it's actually pretty low. However, looking at the dividend growth compounding over time, actually that investment led in 2022 to Berkshire Hathaway and Warren Buffett getting $704 million in dividend payments from Coca-Cola to them. So if you take the yield on cost on the original investment of $1.3 billion, that would have been a 54% annual return by dividends alone. I mean, that's mind-boggling, and that's obviously going to continue and grow every single year for the future as long as he invested. So really a powerful example of how strong dividend growth can be over time. Now let's have a quick look at all the brands that Coca-Cola has, because honestly, I actually thought in the beginning they only have Coca-Cola plus a few other soda brands, but in fact, they have so much more. You can see here some of the brands actually I never heard of, and their goal is really to become a total beverage company, meaning touching every different segment of beverages. You can see over here from coffee and tea, juices, dairy plants, sparkling soft drinks, waters as well they're getting into, and alcohol ready to drink beverages as well. So you can see here all the various different brands they have. Again, a lot of them I've never heard. They're obviously operating in various parts of the world. Coca-Cola obviously being the strongest one. One of the latest additions is Body Armor that they acquired just recently. So that's an interesting sport drink that obviously has a bright future ahead as well. And then over here, something I was really surprised. I didn't know that they acquired Costa Coffee, one of the leading UK coffee chains, and now really expanding globally. And honestly, I really love Costa Coffee. Probably enjoy it more than Starbucks. So buying into Coca-Cola, technically, I'm also getting my coffee fix done. So in the future, I will definitely much more happily go into a Costa Coffee and spend my money because I know I do something for the share price being a shareholder, right? So that's really great to see. And obviously, they just bought it before 2020. We all know what happened. So now that things are opening up again, I think they're really going to push out Costa globally even much more to compete directly with Starbucks. Now, for any of us, it's hard to predict what's going to be in 5, 10, 15, 20 years from now. Who knows? We might have flying cars. Artificial intelligence is taking over. We might be living in the metaverse. Who knows? There's so many ifs and whats, right? But one thing that is for certain, most likely humans still going to be alive and they need to stay hydrated. That means they need to consume beverages. And that's exactly what Coca-Cola aims to do, to be a total beverage company serving every different need of beverage for human beings, from soft drinks to waters to coffees to teas. They have pretty much anything. And even if you live in the metaverse, you're still going to be drinking a Coca-Cola or potentially coffee from their brand or one of their waters. So that gives me confidence that in the long term, their business model will stay relevant. Then over here, Fanta, obviously quite popular and famous around the world. Jack Daniels, Coca-Cola, Innocent Juices, also very popular around the world. Minute Maid, some juices. Schweppes, which is another global brand as well. Sprite, of course. So yeah, really a lot of huge brands all under the umbrella of Coca-Cola company. So when we look at their financials, obviously Coca-Cola is not a high growth tech stock. And I'm totally fine with this, right? When we look over here, over the last 5 years, it only, if you wanted to say, grew by 33%. But that's considering, of course, we all know 2020, what happened. So that obviously took a big nosedive and still came back quite strongly over time. So, when we look at 10 years, it grew by 54%. So it's really a slow burner, but over time, it's gaining momentum. And of course, it offers a very attractive dividend yield of 3.07%. It has a tiny short interest because who is really betting against Coca-Cola? The only one I could imagine would be some Pepsi employees. So when we hop over to Dividend Watch, you can also have here a little bit of a stock analysis, and you can see here the dividend safety score somehow ended up on the low side. However, that also has reasons because they've been investing quite a bit of money recently into acquisitions, future-proofing themselves and acquiring new brands to serve new markets. So that's why I'm really not too bothered. Obviously, they have been paying out for the last 60 years, so I'm not really scared that they now all of a sudden stop paying any dividends anytime soon. If we hop over into the dividends, you can really see over here how nicely it's been developing. Obviously, the payout ratio is a little bit higher, even though here it says monthly. Actually, they do pay out quarterly, but I'm really happy with this because I do prefer a quarterly dividend and of course monthly over an annual one. Ultimately, it doesn't matter if you look at your annual dividend income, but it's just nicer to see more money coming in regularly. And you can really see here, just in 2008, the dividend payment you would have received by holding one share of Coca-Cola was only 76 cents. Now, 14 years later, it more than doubled to $176 per share. So you can really see that's what I mean by dividend growth snowball effect. And that's the power of dividend growth investing. I also really enjoy their investors profile on coca-cola.com. You can really have here all the information you need on what's happening, upcoming reports, etc. And you can here go into the strategy and really get an idea of what they're investing in, what they're seeing. This graph for me is really powerful. It shows how many people in the world are currently Coca-Cola customers versus how much the total addressable market is still left of people being converted into Coca-Cola customers, right? So that has a huge potential in the future. So it's not like it's saturated and every single one is using already all their product. There's still so much more growth for them in the future. They really have some good insights over here. So I really recommend you to have a read through and better understand the company you want to invest in. And I think it's important to really understand, not just because somebody like myself said it's a good company to buy, but do your own due diligence. Go through, understand what their intention is, where they're heading, what kind of markets they want to go after. Do you see any roadblocks along the way? Do you feel comfortable investing in such a company? Here I can really see the product. It's understandable for me. I can see how they deliver value and continue to grow. And for me, that's really much more attractive than something that is just a concept I don't personally understand or can relate to. On their website, you also find their latest quarterly results and filings. So you can really go through all the numbers and they really have everything very transparently here. But honestly speaking, that's a lot of content and text to go through. I prefer actually going through the presentations and getting a consolidated view. Some of the latest updates over here from February actually in 23, because they need to report on a quarterly basis to their shareholders. So this will come out every 3 months. And I think it's important to go through and understand what's happening in the companies that you own. That's why I don't believe in owning 60, 70 companies, because it's very hard to follow every single one of them. But those with the biggest percentage in your holdings, I think it's very important to really do a deep dive and understand if it's still relevant. Are they still aligned with your values? Are they going the right direction? And then if you're happy, continue to invest with them. And one website I really recommend you to check out is called Quartr.com. And here you can really listen to all the earning calls and get all the documents free of charge, basically. Once you register with them free of charge, you can just look for any publicly listed company, most of them obviously in the US, but also in Europe, many of them. So you can go in here and just click Coca-Cola company And then here you see what was the last event, was the next event, and you can also listen to them. That's really amazing. Just click on it and then I can start listening to it.
And lastly, we're delivering new and unexpected innovation.
And here CEOs, board members talking about Coca-Cola, presenting the numbers to me because I'm a shareholder. They're basically working for me and reporting to me. So that feels really amazing. Obviously my holding is tiny, but technically I'm their owner and they're now reporting to me. So for me, that's really exciting. And by listening to them, you get a much better grips rather than reading a 50-page report. I can really understand what is their vision, what they're looking forward, what are their struggles in the future, and they're quite open. There's also a Q&A section usually where people can ask questions. So for me, that's super powerful. And every quarter, I'm definitely going to listen to all the companies that I own through that app. You can also download it on the phone, listen to it on the go, and you can also have access to all the various reports over here. So yes, definitely Coca-Cola, probably not going to be a hot stock of the week ever because it's just a very predictable but long-term growing company, a machine that really produces dividend growth over time. It is very reliable and predictable, and that's something I appreciate, because if I have all my money in crypto or some tech growth stocks, it might take off, great, but it might also not, as we see right now in the bear market. So this is a really solid stock and company to own and should be part of an all-weather portfolio that is good in good times and good in not so good times. And that's why I'll continue every single month into Coca-Cola, even just small amounts. Over time, it will compound, maybe not as much of a number as Warren Buffett's, but it will definitely continue to grow and start building more passive income for myself in the future. In this video over here, I'm actually going to show you all my dividend stock portfolio holdings. I hope you enjoyed the video. Please give it a like, subscribe to the channel, it means the world to me. Stay healthy, get wealthy, and I see you in the next one. Ciao!